Hello traders, Gary Wagner here, just after 12 noon in Honolulu, 6 o'clock in New York. It is Friday, happy Aloha Friday as we say on the island, 8th day of February, 2019, and this is the Daily Report for Gold and Silver, our weekend review, and what a way to end the week on an extremely strong note with most of the metals trading higher on the day. In fact, the entire precious metals complex trading higher. Gold up about $4 at $1,318.20, about 0.3%. Silver gaining about 0.7%, an 11-cent gain at $15.82. Platinum 0.6% to the upside, above 800 at 802.40. And the one market that has been a runaway freight train, the king of the hill, so to speak, has been palladium, which is up 1.5% today, a $20 gain at $1,378.50. And that is all in light of a fractionally higher U.S. dollar today, up about 13 points, but more importantly, really since the end of January, we have seen it gain substantial ground, about 1.5% in terms of value, as it traded at about 94.88 and is currently at 96.42. And that, to me, shows the resilience of the precious metals complex, considering recent strength in gold. Now, in terms of the industrials and the equity markets themselves, we do have a mixed bag. 63-point drop in the Dow Jones Industrial Average. E-mini slight gains at 2708. And the NASDAQ Composite also exhibiting slight gains, about a 10-point gain at 972.98. Traders, there's absolutely no doubt today's $4 gain, I believe, is extremely significant considering what has come before it. And really, the way that we need to look at this market is that beginning about mid-November, gold prices kind of bottomed just at around 1,200. And then from 1,200 over the next couple of months, staged a dynamic rally. And that rally really peaked on January 31st, when the market traded to an apex of $1,330. From there, we saw the market begin to track and trade lower. We had consistent series of lower highs as well as lower lows. That occurred up until yesterday. We had some solid performance, although it was a nominal gain on the day yesterday. Today, solid performance, although a nominal gain today. But what we talked about yesterday, to me, what I found most noteworthy was the fact that although yesterday contained a lower low than the previous day, the close was above $1,312. And traders, that is the point that I have believed we have seen a critical level of either support or resistance. Of course, once we broke through there, I was expecting this market to actually break lower. I thought that we could see it go as low as $1,300. And $1,300, traders, basically is the 0.23% retracement of the rally itself from 1,200 all the way up to 1330. Now, the way things went towards the end of the week is a statement to the major concerns that traders currently have regarding multiple factors, and those are the factors we talked about in our opening letter. 1, February 15th, will the government shut down, or will the politicians who have the power to control this be able to resolve their differences and actually keep things going and pass the proper legislation to do that? That's the first thing. The second thing is we have certainly seen the Federal Reserve take a much more dovish stance than previously. We still have major concerns about a trade war that currently exists between the United States and China, and that deadline is also quickly approaching. And then a couple of political hotspots, specifically Venezuela. When you combine all of those together, you have the making for strong support in gold and real resilience in price, and that's exactly what we have seen. And traders, even with the last couple of trading days bringing gold prices much higher, when we look at our weekly chart, and that's what I've just pulled up, a weekly candlestick chart of April futures, what we can see is that when we consider the lows that we saw in gold, I believe that was around 1306, and the fact that we closed at 1318, the high today was 19, but we have had a high a couple of dollars above that. We can see that this was a pretty resilient recovery in the marketplace, but gold did close lower on the week, although marginally lower. So what I can say is if this is any kind of a real correction, it is as shallow as it gets, and it doesn't really meet any of the real criteria because we haven't even seen a retracement of 23%. And traders, to illustrate that point, I have gone ahead and added back the short-term retracement. This is the one we have been looking at all week because the way that I am looking at a very, very crude Elliott wave count is we bottomed out, obviously, when the market hit these lows that were just above 1160. From 1160, we had a pretty major rally in which the market came up to about 1245. From 1245, it fell back down to about 1200. This would be a wave 1 here. This would be our corrective wave 2. And then we went into this long sustained move. This rally, I believe, was a really good, strong impulse wave or a wave 3. When we look at it in that way, we can see the different fib levels on the left-hand side representing just the part of the rally that includes this last component here, meaning $1,200 up to $1,331. And when we do that, what we see is that the real first level of a acceptable retracement that is shallow is going to be a 0.23% retracement level, and that comes in at around $1,300. You can see that here, and 1,300 is also a key psychological number on top of it being an important fib percentage retracement number in this case. So we have this particular level, as I said, at 1,300, and even a shallow retracement could easily go as low as a 0.38% retracement. That would be about 1280. We came nowhere close to that price point. In fact, if anything, we avoided it completely. So that tells me that what we're witnessing here is a rest area, a consolidation in the market, so to speak, but it is certainly not an end, I believe at this point, to the end of the rally, this wave 3, which began in November, markets trading at 1,200 and takes us to 1,300. Rather, I believe that what we are seeing is a much smaller kind of consolidation in the market, such as what we witnessed here if we do a subcount, kind of like a 1, 2, 3, 4, and 5. I still don't believe we have concluded it. This third wave would not be long enough. I still believe that we're in part of that. And that's what tells me that we could be headed for higher pricing. If you recall, over the last couple of days, we have been talking about the fact that there have been really solid indications that what we could be witnessing at this point is consolidation rather than a correction. And we looked at this key number at 1312 as a number that really needed to hold or to be broken to kind of confirm or deny that factor. Once we broke that, though, and that was midweek, right here, this being Wednesday's trading activity and this being yesterday, Thursday's, at that point I said, you know what, we're probably in a real defined correction, and I was pretty convinced that we could see the market trade as low as 1,300. But as I said, that was short-lived because we saw a series of moves over the last couple of days, and I believe based on strong fundamental possibilities that we talked about in the opening letter, as well as in our commentary on the first part of the technical studies, that really indicates that we could be off to higher pricing next week. It is for that reason that we will look to initiate a long position at the beginning of next week, assuming that when the market opens up on Sunday in Australia, moving across the globe and then into the States, we will go long this market. We will look in terms of a stop placement at the levels of 1300 to 1306, but we will send out a special trade alert to that effect. And traders, lastly, an extremely solid performance in Palladium once again. And really to get a sense or a feel for where this market could go, we need to look at the long-term picture and also to create a Fibonacci extension, which is what I've just done. We are starting at the conclusion of 2015, beginning of 2016, when we've got palladium at $445 per ounce. We take that through the entire rally that occurred following that, in which this market traded as high as just above 1100 and then went into a corrective mode. So we begin our extension from approximately $816 per ounce. Now, when we do this, if we're going to assume that this is a sort of a wave one and a wave two, when we look at the potential move that we are currently witnessing, we are just off of the highs, just shy of $1,400. Market closes at $1,378. On a closing weekly basis, this is the highest close ever that we have seen in Palladium. It is once again approaching 1,400, but traders, just a 1-to-1 in Palladium would take us to $1,500 per ounce. But traders, I want to leave you with this thought, and that is, if in fact what we are looking at in Palladium, this was a wave one, moving up to here, and this was a wave two, we know that wave three cannot be the smallest of any of the impulse waves, which would say that at minimum, we will see palladium go to about 1,500. So it's got another $100. However, in a strong rally mode, and we can certainly say that that is true for palladium, you can typically see this wave three extension go as high as a 1.618% extension of wave one, and traders, that would take palladium to $1,925. Definitely something to think about. Traders, there is absolutely no doubt the action that we saw in the precious metals markets does bode well for the bulls. It tells us that we have very resilient prices in both gold and silver. We have extremely strong market sentiment favoring the bull side in palladium. Platinum is really the only precious metal which has not been keeping up with, in terms of percentage gains, the other precious metals in the complex. Given that there are so many fundamental factors that could really ignite gold pricing next week, I am looking for higher prices in gold and a continuation of this major move that we have seen in palladium. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for another daily update and review. Bye-bye.